gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900, without any resistance. So I think the price of gold can double, can triple from here, and potentially go much higher than that. I think at some point the price of gold is going to rise high enough that greed is going to start to replace fear in the market. And then you're going to start to see investor interest really picking up in the mining stocks. And I think they have a long way to go just to catch up to where they should be.
Gold has long been regarded as a reliable hedge against economic uncertainty, inflation, and currency fluctuations. However, the bull run over the past year further solidified its appeal to investors. Market analysts widely expect gold prices to rebound next year as the precious metal continues to be a sought-after safe haven asset. This positive outlook is driven by sustained demand from both Asian consumers and central banks, which are likely to provide ongoing support for gold prices. Peter Schiff, chief market strategist at Euro-Pacific Asset Management, shares his outlook on the U.S. economy for 2025, offering his perspective on whether Trump's proposed Department of Government efficiency could effectively address the nation's debt crisis. In the whole scenario, Schiff strongly believes that the price of gold is poised for significant growth. He highlights that we are currently in uncharted territory, with no precise resistance levels, suggesting that gold is on track to surpass all previous records. According to Schiff, the breakout this year signals that gold is heading towards much higher levels. The long-term outlook for gold remains optimistic, bolstered by macroeconomic uncertainties and potential changes in U.S. trade and monetary policies anticipated in 2025. Traders are advised to closely watch inflation data, Federal Reserve statements, and geopolitical events for further market cues. Gold prices are expected to challenge key psychological levels, such as $2,500 and $2,700 in the near future, with significant movements hinging on the development of these factors. In the meantime, a cautious sentiment may prevail in the market. Looking ahead, Peter Schiff believes the price of gold will eventually reach a point where investor greed surpasses fear, sparking substantial interest in gold mining stocks. He anticipates this shift could occur within the next year. While some investors may lose patience along the way, Schiff is confident that the eventual surge in gold prices will reward those who remain committed to their investments. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
For gold?
Yeah, for gold.
Well, I don't know how I could be anything but positive on the price of gold. First of all, if you look at a chart, we're in uncharted territory. There is no resistance. So it looks like a big breakout. Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to a much higher level without any resistance. So I think the price of gold can double, can triple from here, and potentially go much higher than that.
Were you a little concerned about how fast it went up? Were you looking at a consolidation? It seems to be healthy here.
Didn't go up very fast. It was a big move. In fact, prior to the election of Trump, we were on track for the biggest percentage gain in gold since 1979. Now, we still might get back on track for that. Depends on how December goes. But even if it's not as, the best since 1979, it's one of the best years. Gold's up about 30%. And more significantly, so far this century or millennium, since January of 2001, gold has outperformed the S&P. In fact, it's outperformed all the major stock market indexes. In fact, you can go back to 1999 from the bottom of gold, when gold was, close to 250, and it's outperformed everything since 1999. So you're talking about close to 25 years where gold has beaten the stock market, yet there's no euphoria for gold. There's plenty of euphoria in the stock market. Nobody cares about risk there. Heightened risk is maybe being priced in. Gold had a pretty big bounce this week, although it was just recovering what it lost the prior week based on the euphoria over Trump and a lot of the, I think, misplaced optimism. But the dollar strengthened, And gold rose despite that. In fact, this week, gold, or on Friday, closed at a new all-time high in terms of euros, in terms of British pounds. War is generally good for gold, not just because of the uncertainty and people buying it as a safe haven, but wars are inflationary because they're ultimately financed by money printing. And so the more inflation central banks create to fund wars, the higher the price of gold. Plus, wars tend to be disruptive of production. Maybe it disrupts supply chains or productive facilities. And so you get more money, you get less stuff. That's a real recipe for much higher prices.
Bitcoin surged to all-time highs of over $90,000 in 2024, pushing the Bitcoin to gold ratio near record levels. Cryptocurrency investors are buoyed by President-elect Donald Trump's favorable stance on digital assets. On the campaign trail, Trump stated his goal to make the U.S. the Bitcoin superpower of the world, sparking speculation that crypto regulations may become more lenient after years of legal battles and strict oversight of the industry. However, Peter Schiff remains critical of Bitcoin's role in the financial system, arguing that despite its popularity among speculative investors, it lacks the intrinsic value and stability that make gold irreplaceable. Schiff emphasized that gold's attributes, scarcity, liquidity, and historical significance as a monetary asset, underscore its status as a reliable safe haven. In contrast, he dismissed Bitcoin as counterfeit gold or fool's gold, claiming it does not possess the fundamental qualities required to serve as a long-term store of value or a hedge against economic uncertainty. Now, let's redirect our attention to a video.
I think that's basically treason on the part of Loomis to try to say we should squander our gold assets on Bitcoin. It'd be one thing to just even recommend buying Bitcoin, but to say to pay for it by selling our gold. But, she wants to say it's not going to cost the taxpayer money because we're just going to sell this worthless gold, that we, just gathering dust at Fort Knox. We'll just sell that. But, of course, it's going to be highly inflationary because now the people who own Bitcoin, who sell it to the U.S. government, have a lot of cash to go out and buy stuff. But at the end of the day, Bitcoin is not a viable reserve because what makes gold a good reserve is that if the U.S. government ever needed to sell the gold in an emergency to prop up the dollar, there is a very deep liquid market that could easily absorb the selling. But if the U.S. government tried to sell a significant quantity of Bitcoin, the market would crash. In fact, the only reason that Bitcoin is, knocking on the door of 100,000 and probably going to be through by the time anybody sees the interview, right? Yeah. But the only reason it's there is because everybody expects the U.S. government to buy millions of Bitcoin, to spend billions and billions of dollars, waste taxpayer money, which I think is really the ultimate irony because Bitcoin was created as supposedly this is the alternative to government, where it's decentralized, we're rejecting fiat money and government, yet now it's completely dependent on government because it's the government that's creating all the demand. And so it's not that the free market is choosing Bitcoin. It's that government is using the coercive power of the state to basically force people to buy Bitcoin. Because when the U.S. government buys Bitcoin, I'm an American citizen. I'm not choosing to have my tax dollars used to buy Bitcoin. Right? The government is doing that against my will. But what's happened is you had all the money in the Bitcoin industry, the crypto industry, was able to corrupt all these politicians by donating to their campaigns and funding them. And the payback, right, with the return on that investment that they're looking for is the government to buy Bitcoin. They also want the government to make the gains on Bitcoin tax-free so they can sell all their Bitcoin to the U.S. government and pay zero taxes on the gain. So it's a great deal for them, but it's a disaster for the country. Hopefully, Donald Trump, stands up to this and doesn't sell out the country to the crypto crowd.
All right, we got 8,000 tons of gold on the balance sheet, the largest gold reserves in the world, priced at $42, $22 an ounce. I mean, what about Cynthia trying to say, okay, let's put this at current market value?
Well, it's already at current market value. Everybody knows what it's worth. Nobody claims that it's $42 an ounce, and the government certainly wouldn't sell it for $42.22. It just shows you how much value the dollar has lost since we went off the gold standard. Now you need $2,700 to buy what you could have bought for $42. And in fact, you could have bought it for $35 in 1971 when we closed the gold window. So that price doesn't mean anything, and it doesn't create some kind of windfall to say, oh, let's value it at the market and then sell it get rid of our gold.
Right.
That would be the worst monetary mistake the U.S. could make. Remember, the British sold a bunch of their gold back in 2000. They marked a low. They sold that at about $250 an ounce. Now, certainly, it's higher price now, but given all the inflation that's been created and will be created, makes no sense to sell it, especially if the goal is to buy Bitcoin instead of gold. Because Bitcoin has none of the attributes that give gold its value. It's counterfeit gold. I said it's fool's gold.
Looking ahead to 2025, some gold assets present compelling opportunities, while others carry risks that may overshadow their potential benefits. A Trump presidency could serve as a catalyst for higher gold prices, particularly as new tariffs introduce uncertainty into global trade. Such disruptions may drive investors toward gold as a safe haven asset amid heightened volatility. Although gold prices have recently dipped, many analysts remain optimistic, forecasting that the precious metal could soon reach the unprecedented milestone of $3,000 per ounce. This outlook reflects gold's enduring appeal in uncertain economic environments and its role as a hedge against market instability. Do you see rising gold prices as a reflection of global economic fears or as a natural outcome of its role as a safe haven asset? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.